Thank you for joining me this Friday, the 10th of February. I'm Grady for Market Analyst with Bell Direct, and this is the weekly market update. Week 1 of reporting season for February 2023 is now complete, and investors have been very reactive to company results, especially when it comes to the provision of guidance and forecasts, cost-cutting measures, and determining just how companies fared through the high inflation, rising interest rate environment. With 18 companies having reported so far, 7 have beat expectations, 7 have come in line with expectations, and 4 have missed expectations. We have noticed investors sharply selling out of stocks that have failed to provide quantitative outlook and forecasts for the remainder of FY23, while buying into some companies that have shown strong cost-cutting measures and sustainable profit, especially in the current market environment. Let's dive into the big movers and shakers of reporting season this week. Suncorp shares were a hot commodity on Wednesday, rising 4.5% after the financial conglomerate released first half results, including group net profit up 44.3% to $560 million and cash earnings up 62.9% to $588 million. The company also boosted its dividend payout to 33 cents per share, representing a 71% payout ratio of cash earnings. Group operating costs fell 3.1% to $1.349 billion, largely reflecting efficiency benefits from the strategic program of work, and the company reaffirmed its FY23 financial targets, which investors have been looking for companies to share this reporting season. Boral shares surged over 12% after the leading building and construction materials supplier released first half results this week. Following a turbulent few years, the company appears to have cemented the foundations for consistent and profitable performance under new CEO Vic Bansal, who clearly impressed investors with the delivery of his first operational results under his management. The key highlights of the company's first half results included revenue rising 12%, driven by volume and price, and NPAT surging 53% to $56.8 million. AGL released results on Thursday, and investors were less than impressed, with the electricity and gas company's shares tumbling more than 11% in just one session. For the first half, AGL reported a statutory loss after tax of $1.075 billion, including $706 million of impairment charges due to AGL's accelerated decarbonisation plan. Underlying NPAT was down 55% to $87 million. The dividend per share was halved to 8 cents per share, and total generation volumes down 7%, primarily due to the Loy Yan Unit 2 prolonged forced outage. The cherry on the cake for investors to sell out of AGL shares on Thursday was the fact that the company narrowed its EBITDA and NPAT guidance range for FY23 to the lower end of the initial guidance set. Amcor shares also came under pressure this week after the global packaging company released first half results that were in line with expectations, but outlook is softer amid predicted challenging market conditions. For the half, net sales increased 6% to $7.35 billion. EPS increased by 65% to 46.1 cents per share. EBIT rose 8% to $791 million, and the company declared an unfranked quarterly dividend of 12.25 US cents per share, up from 12 US cents per share in the same quarter last year. Investors sold out of Amcor shares after the company's management revealed a more cautious near-term outlook on consumer demand and noted pressure from destocking. Next week, the big names we'll be keeping an eye on this reporting season include JB Hi-Fi, Origin Energy, James Hardie Industries, Beach Energy, Carsales.com, Challenger, and the Commonwealth Bank of Australia. Locally this week, from Monday to Thursday, the ASX fell almost 1% on the back of the RBA raising the nation's cash rate by 25 basis points to 3.35%. The rate hike caused a sharp sell-off in REIT stocks, which weighed down the key index for the week. Energy and materials stocks were the only two sectors to post gains for the week amid strong commodity prices as China reopens and drives solid demand outlook for key commodities like iron ore and oil. The winning stocks from Monday to Thursday were led by Newcrest Mining, adding 12.34% on the back of a takeover offer. Boral climbing 7.32% on the back of solid first half results, and Medibank Private rallying 5.1%. On the losing end, Credit Corp took the biggest hit this week, falling 11.53% on H1 results, while Helios and Centuria Capital each fell 11.15% and 10.9% respectively. Taking a look at the All Ords, Nuix rocketed 72% this week after the Federal Court of Australia dismissed claims made against the company by its former boss to the value of $182 million, while Rubicon Water rallied 17% this week. Dicker Data weighed on the All Ords, tanking 19% on H1 results, while Nick Scali also fell 18.76% on H1 results. The most traded stocks by Bell Direct clients this week were Macquarie Group, Bellevue Gold, Incitec Pivot, MMA Offshore, AUB Group, Rio Tinto, Red 5 and Argosy Minerals. Investors also bought into BHP Group this week while taking profits from Newcrest Mining. And the most traded ETFs by Bell Direct clients this week were Vanguard Global Aggregate Bond Index ETF, Vanguard Australian Shares Index ETF, and Global X Battery Tech and Lithium ETF. On the economic calendar for next week, Westpac consumer confidence data for February is out on Tuesday, with analysts expecting a rise in consumer confidence to 85.3 points from 84.3 points in January. NAB business confidence data for January is also out on Tuesday, with the market expecting a rise of 1 point, up from a decline of 1 point in December. Overseas, US inflation data will be released for January, which is out on Wednesday, with the market forecasting a decline to 6.3% for the month, down from 6.5% in December. And that's all we have time for today. I'm Grady with Bell Direct. Have a wonderful weekend and happy investing.